Ladies and gentlemen, good day and welcome to the earnings conference call of JK Lakshmi Cement Limited for the quarter ended 30th June 2025. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vaibhav Agarwal of Phillip Capital. Thank you, and over to you, sir.
Thank you, Reo. Good afternoon, everyone. On behalf of Phillip Capital India Private Limited, we welcome you to the Q1FY26 call of JK Lakshmi Cement Limited. On the call, we have with us Mr. Arun Kumar Shukla, President and Director, and Mr. Sudhir Vidkar, Executive Director, Corporate Affairs and CFO at JK Lakshmi Cement. I would like to mention on behalf of JK Lakshmi Cement Limited and its management that certain statements that may be made or discussed on this conference call may be forward-looking statements related to future developments and which are statements which are based on current management expectations. These statements are subject to a number of risks, uncertainties, and other important factors which may cause the actual developments and results to differ materially from the statements made. JK Lakshmi Cement Limited and the management of the company assumes no obligation to publicly update or alter these forward-looking statements, whether as a result of new information or future events or otherwise. Also, JK Lakshmi Cement has uploaded a copy of the Q1FY26 results presentation on stock exchanges and the company website. Participants may download a copy of the said presentation from these websites. I will now hand over the floor to the manager of JK Lakshmi Cement for their opening remarks, which will be followed by interactive Q&A. Thank you, and over to you, sir.
Thanks, Baba, and good afternoon to all of you. So this time, as requested by some of you, that we need to upload our presentation, so we have done that this time. So probably you would have downloaded the presentation for the meaningful discussion in this conversation. Since we have given everything, I think we can start our conversation right away. But before that, I'll just give you a glimpse of the industry, which is important. Though I think all of you are in touch and you are tracking the development in the industry, but nevertheless. Demand supply side, if you look at last quarter, the volume growth is about 5 to 6%. This is what we have seen. And there is regional disparity in terms of volume growth. So some of the zones have done better, but some of the zones have not done that as good. So this is on demand side of it. On pricing, some of the geographies have witnessed a good price increase, particularly South and East. South to the extent of about 8 to 9%, and East also about 6 to 7%. North and West, I think, have not witnessed that much increase, and also central part of India. West, in fact, I think prices have been little bit slid last quarter. So this is on pricing side of it. If you look at what kind of drive we have within the organization, so I think that remains what I have been talking about for the last so many calls. We are looking inwardly as to how we can really improve our efficiency across the value chain to be amongst top companies in terms of EBITDA per ton. And I'm happy that I think directionally we are all right, and we are working on all those levers which is going to take us to that level. On the manufacturing front, of course, I think renewable energy is one of our areas where we are focused. That is what is going to give us savings going forward. Second is improvement of TSR, thermal substitution rate. We are doing better, and in coming quarter, I think things will further improve. Of course, I think after this monsoon quarter, which is typically challenging in terms of operational difficulties when you use AFR and RDF. Third is digital front. We are working quite intently and extensively, and particularly on manufacturing front. So there are few initiatives which we are going to take on digital front, which is going to drive our efficiency further. On supply chain front of it, yes, I think constant focus is there to optimize this in terms of our dispersion and also in terms of per ton per kilometer freight. On top line front, the recently rejuvenated brand of Green Plus and ProPlus is doing very well. And with this, merger of UCWL and those two brands coming to our fold, JK Lakshmi fold, which is Platinum Heavy Duty and Platinum Supremo, is further going to help us to improve our channel reach and volume. That is what we believe. We are constantly working on improving price positioning aftermath of this new brand launch, which we call, Green Plus. So that effort is also on. Apart from that, I think, which I think Vaibhav has been mentioning in his, thesis, and I'm quite aligned with him, that how we can really improve this, ground level kind of, working in terms of efficiency, in terms of, dividing all those, redundancies. I think that is also in our sight. So this is what we have with us. I think just a brief prelude to our discussion which we are going to have now. So thanks for now. Now we can start question and answer.
Sure. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. The first question is from Amit Murarka from Axis Capital. Please go ahead.
Yeah, hi, good afternoon. Thanks for the opportunity. So, first question is on volumes and realizations. You've done quite well in this quarter. What would be the guidance that you would like to give for the full year from a volume perspective now?
So as I said before, we'll do better than industry, and we are well on track. So we'll deliver that, at least, incremental over the industry growth. That is, we are confident about.
Sure. Could you also highlight, like you keep optimizing on the geo mix as you have been highlighting. So, has this volume growth come from other regions? Because what we have to also understand was there was weakness in the northern India region this time.
Yeah, Amit, you are right. So I think, yes, as I told in the last call also, that some of the areas where we are going to be there in future, so we have started seeding those markets. So yes, volume has come from those areas, those markets, and you would have noticed that our lead also has gone up to an extent. So that is the outcome of that, like, central part of India and particularly UP East. So volume growth is coming from there. Of course, I think North was a flat kind of thing, or not done that well in terms of volume, but yes, we have got growth out of those newer market, one. Second, I think we had, clinker also with us, so that has helped us to improve, our volume little bit. And market like, MP East, which we cater from Durg and Maharashtra East, so that has helped us to improve our volume. Of course, I think other zones have also done reasonably well, and we are in alignment with the industry growth in those markets as well.
Got it. Thank you. And just second question on the expansion in East. So what is really the status right now? I think, is the equipment ordering done? And if not, then how soon can we expect that?
Equipment ordering, you are talking of the Durg plant, no? Expansion.
Yeah. Yes.
And expansion, we hope to start placing the order from the current quarter.
Sure. So March 27, I think, is what you're guiding for completion. So then,
hopeful that we'll be able to do that.
Got it. Sure, I'll come back in the queue. Thank you.
Thank you.
Thank you. Participants who wish to ask questions, please press star and 1. Next question is from Vishal Dudwala from Trinetra Asset Managers. Please go ahead.
Yeah, thank you for the opportunity. Am I audible, sir?
Yeah, very much.
Yeah. So, like JK Lakshmi Cement reported a twofold increase in net profit on a YOY basis, plus volume growth is fantastic. So, I want to just know, partially attributed the merger with Udaipur Cement. Can you elaborate on the operational synergy already realized post-merger in this quarter?
I think almost, all those synergies we had been doing before, right? So I think we have realized almost of that. Maybe I would say to the extent of 80-90%.
That's it from my side.
Thank you. Participants who wish to ask a question, please press star and 1. Next question is from Ashish from Leo Capital. Please go ahead.
Sir, can you just reiterate what's the timeline for commissioning of our Durg expansion project? And my second question is, what sort of utilizations are we operating at currently in the east?
East, currently I think we are almost operating at 100% kind of thing. And this is what I think you are. So east, I think our efficiency is good in terms of capacity utilization. And on
that project, we expect the first phase, which will include the clinkerization and 2 grinding units, one at the mother plant at Durg and another in the Madhubani, would happen by March 27, and 1 year later the balance, the other 2 grinding unit will happen. That is what we think are the timeline as of now.
All right. Thank you, sir. That's all from my side.
Thank you.
Thank you. To ask questions, please press star and 1. Next question is from Rajesh Ravi from HDFC Securities. Please go ahead.
Hi, sir. Good afternoon, and congratulations to the team for a strong performance. My first question pertains to on the Northeast expansions. What is the status on the expansion of the Northeast project?
Yeah, Northeast, there have been some development which we have been reporting to the exchanges. We have now, there was, as we mentioned earlier, that the MDO agreement which AMDC had granted to Trivikram Consortium, that was cancelled, and we obviously filed a writ petition in the Assam High Court against that. But parallelly, we have been able to retrieve at least 2 of the 3 mines having limestone reserves of about 250 million tons. That has come directly as an MDO in JK Lakshmi.
Okay.
So we, and the third mine may be auctioned in future, but we have got direct access as 100% owner in those 2 mines. Out of 335 million reserves which were there in 3 mines taken together, we have now access 100% for the 2 mines. So we are pursuing with that. The land which was allotted in the name of Mahabad in that consortium, we have now got that transferred in the name of JK Lakshmi. So ultimately this Northeast project, which was earlier supposed to have happened in a subsidiary, Agrani and other things, will happen in JK Lakshmi as 100% owner. So what it also means that the balance consideration, which out of the 325 crores was the transaction value for that deal, and we had already paid based on the milestone achievement, 130 to be precise, to the erstwhile owner, and the balance 190 was payable on the achievement of certain milestones in future. That would obviously not require to be paid in future. So we get the 2 mines directly in our JK Lakshmi. The royalty is slightly higher. Earlier it was 105 rupees with escalation of 5% every 3 years. Now that has come to us at a royalty of about 251 rupees per metric ton. So that is the status. We hope to, now once the land is already is in our possession, so we will start placing the order immediately after the Durg placement. It will be a replica broadly from the Durg.
Okay, so see 130 crore which you had paid to the erstwhile promoter. So is there anything that you need to get this recovered, because now it is happening directly under JK Lakshmi?
Yeah, we'll pursue with them. We are exploring that once this everything is streamlined as far as JK Lakshmi is concerned. We'll explore those legal possibilities of getting that money.
So what will be the total project cost now when you are doing it as on your own basis, and what will be the project?
Because nothing has changed thereafter. Therein project cost is not going to change. We have to firm it up, actually we'll be able to respond by next quarter the exact size which we are going to put in our as part of JK Lakshmi only. Earlier we were toying with the idea of doing a 1 million ton clinker and 1.5, right? And that was costing about anywhere between 2,000 to 2,500. Now we'll explore and then confirm maybe hopefully by when we have the con call for the second quarter meeting results, we'll be able to confirm the exact size and the project cost.
Okay, great. And two more questions. First on the, could you share the this non-cement revenue EBITDA? And second, what is the CapEx outgo which total on a consolidated basis for FY26-27, which you're looking at currently?
Now, as far as that non-cement is concerned, is about 144 crores is the total what we have done in this, with an operating margin of 4%. Regarding your question of we are doing in the current year, it's expected to be about 1,800 crores FY26. Anywhere between 1,500 or so, then 1,800, then again 1,500. That is what.
Sorry, for next 3 years, 15, 18, 15 years guiding?
Yeah, 15, 18 and 15. Okay,
and possible to share some breakup of this 1,500? How is that placed between?
Broadly, it will be primarily will include the Durg expansion and the northeast. Northeast will happen maybe about 6 months later, but broadly it will be Durg expansion.
Okay, and this railway siding which is pending of phase 2, what is the status and how much CapEx is needed?
Most of the expenditure has already happened, so that should be marginal only. Surat grinding unit hopefully will be announcing in this current quarter, ongoing quarter, the commissioning of that. So our capacity will be 18 million. And railway siding, as I mentioned, most of the capex has already happened. So marginally there. First phase is already over. So some revamping of the line is required to be done, which we'll do.
Great. And the overhead conveyor belt which was pending?
Yeah, so that is also in the advanced stage of approval. So SAIL board has already approved. The line to Ministry of Industries and Steel. So I think that is final stages of approval now.
So it is more of a procedural delay now rather than earlier it was getting stuck because of the main approval?
Yeah, procedural delay because everything, major thing has already happened.
Great. Sir, just one last question. See, you are now present in almost all markets, barring South. West you are already, Central you are there, East and even Northeast you have plans. So what is pending is in South market. So do you think you should be also looking into becoming a pan-India player over the next 3-4 years?
We evaluate various opportunities and size has to make a sense to us because strategically as of now, as you rightly said, we don't have a presence, so it will not be a strategic fit, but we explore. Right. Yeah, there are some pluses and minuses for pan-India and being concentrated in a few regions as we are today. But we always explore, and if it comes at the right price, obviously, don't rule that out. That is what I can say.
Okay. Great, sir. Thank you and all the best. We'll come back into you.
Thank you, Mr. Rajesh.
Thank you. Participants who wish to ask questions, please press star and 1. Next question is from Ritesh Shah from Investec. Please go ahead.
Hi, sir. Thanks for the opportunity. 2 questions. Sir, how should we look at the cost curve difference between North and East? If you could give some broad guidelines, that would be great.
North and East cost means what? Operating cost you're talking?
Yes, sir.
So I think only difference is in the fuel because in North we do use fuel. It is imported like particularly petcoke and coal, right? But in case of East we have that some linkage coal with us, right? And more so we are dependent on about close to 80% of renewable energy. So that is what the difference is.
Okay. And sir, from a logistics standpoint?
Logistics, I think our leads are lower than what we have in North and West, because we are very focused in the geography of Chhattisgarh, where our plant is there, and we go to bordering areas of some neighboring states. So, lead-wise, we are lower than this place of North and West.
Okay. And sir, would it be possible to indicate broadly EBITDA per ton differential between North and East?
Maybe I think later we can, we do not have, readily available with us, so we can come back to you on this.
Sure. And sir, my second question is, how should we look at the leverage profile? You did indicate broad capex numbers. Now, the reason to ask is, there were a few press notes about we looking for one particular asset in southern India. So are there any broad guidelines on net debt to equity that we have in mind and we should be looking at?
We generally want to be conscious of our leveraging, whether in terms of the net debt to equity or net debt to EBITDA. And as we speak, we have a net debt to EBITDA as of now of 1.5. Generally, our endeavor is to keep it below 3, but when we do go for the expansion as we are doing, at the time when we are nearing the expansion, the debt comes on the balance sheet, whereas the commensurate EBITDA follows 1 year, 2 years later, based on the ramp up which we are able to do from that expansion. So, even if it marginally exceeds that level of 3 times, but so long as the roadmap is very clear how it is going to taper down, we take a call on that. That is how we go about it.
Sure. And sir, just last third quick question. Sir, any hopes on pricing to increase in North and West? Because structurally these are far better, stronger demand supply regions in contrast to what we are witnessing in South. So how should we look at pricing in North and West?
I think prices definitely will uptake going forward. So maybe we are through now the cyclicity of our industry, right? So July, September typically is low in terms of demand. But my sense is I think prices are definitely going to move upward going forward.
Sure, sir. Thank you so much for the answers. I'll join back with you. Thank you.
Thank you. Participants who wish to ask questions, please press star and 1. Next question is from Milind Raginwar from BOB Capital Markets. Please go ahead. Milind from BOB Capital Markets, please go ahead with the question. There seems to be no response on the line of Milind. We'll move to the next question. Next question is from Dharmesh Shah from JM Financial. Please go ahead.
Thanks for the opportunity, sir. Sir, my first question is on with the merger of UCW and JKCL. How should we look at from a brand consolidation perspective? If there will be any brand consolidation or we will operate with all the brands?
So, Dharmesh, thanks for asking this question. So, as I said in my opening address that we are going to continue with the 2 brands of UCWL, which is Platinum Heavy Duty and Platinum Supreme. Now the strategy behind this is that we want to improve our channel reach, right? Because now these 2 brands are well accepted in various markets where we operate. So we want to leverage those brands now, and more so because now they have come under JKLC umbrella. So that is going to give us good leeway to really further expand this and reach out to more number of channels and improve our channel reach and volumetric reach. So this is what the strategy is. So in nutshell, yes, we are going to continue with these 2 brands.
Thank you. And my second question is on this Northeast. So I'm not very clear the reason for increase in the royalty rate and how it will change the project IR, because we are witnessing almost 2.5 times increase in the royalty rate.
Royalty is based on the fresh tender which was floated by this AMDC. So the reserve price itself was 250 rupees per ton. Obviously, it will, on one side, increase the cost of clinker because of the higher royalty, but more importantly, initial cost of the project comes down. So overall, there may not be much difference in the project IRR, including the initial, because we had factored that acquisition cost of 325. That was for 85% stake, and to buy back the remaining 15%, another 100 odd. So that to that extent it goes down. On the other hand, the royalty increases, but that is futuristic. Upfront, because of the lower upfront outgo, the project IRR may not materially be so different.
Thank you. Thank you, sir.
Thank you.
Thanks, Ram. Thank you.
Thank you. Next question is from Madhav from Emerge Capital. Please go ahead.
Hi. Hope I'm audible.
Yeah, very much.
Sir, just wanted some thoughts on how do you view the increasing aggressiveness by Adani and Ultratech, and how is the competitive landscape shaping up?
Competitive landscape has already stepped up, in fact. If you see the last trajectory of 1.5 year, 2 years time. So this has stepped up in a way already, right? And impact, I think, you see, wherever we are, there we are a formidable player. We have, good presence, very good network, good reach, right? So I think we are equally competitive in those markets where, big players are there. I will not name them, but wherever they are there, I think we are equally competitive. And if you see our performance also, I think, market share and whatever we had before, I think is in alignment with that. Okay, so see, competition is going to be there in the market. It's all about, how we are going to have our own strategy, which is going to really take on to those challenges and, ascertain our objective, right? So that is what we are doing. And this is what I think I told in the beginning also, that our much more focus on improving our competitiveness, looking at inwardly. And I told you various actions which we are taking. And going forward also, I think we are not going to relent. We are going to further intensify our effort internally to kind of be competitive in all those markets wherever we play.
Understood, sir. Thank you so much. Could you also just share some thoughts on the market share? What do we have currently?
So market share, I think in different markets, since we are not there, everywhere. So I think wherever we are there, I think we have a reasonable market share of about, 10 to 12% in all those markets. In Chhattisgarh and all, we have even 13-14% market share, right? And Rajasthan, we have a good market share. Gujarat, we are, 13-14% of market share. So all those markets, wherever we are there, I think fair market share, what our definition is, we should be more than 12-13%. And all those markets where we operate, we are kind of having those kind of market share in every market.
Understood, sir. Thank you so much.
Thank you.
That's all from my side.
Thank you. Next question is from Kamlesh Bagmar from Lotus Asset Managers. Please go ahead. Kamlesh Bagmar, please go ahead with the question.
Yeah, thanks for the opportunity, sir. Just referring to some media news saying that we are in the race for Deccan Cement. I just wanted to know I know that you have articulated to the exchanges saying that we assess all those opportunities. But anyways, just to have some sense, why we want to be in the south market. If we see last 6-7 years, say barring Udaipur, we have not expanded capacity in the north market, and which is the most important and most efficient and high yielding market. And if we see over the last 6-7 years, the way the Wonder Cement has come in, or various other players have come in, we are not able to scale up in that market in such a way. So why not proceeding with the expansion in the north market and prioritizing or moving to the south market?
Yeah, so I think north Anyway, we are expanding. We have already added about 2.5 million ton on last, 28th of March 2024. It's not that I think we have not added capacity in North. And in fact, I think we have done some kind of, debottlenecking also. 0.6 million ton at Udaipur itself, close to about, 0.3 million ton at Sirohi, right? So idea was that, let's, exhaust our, capacity first than to kind of move on to next, expansion. And that is what I think we have done. Now, since after Udaipur, anyway, I think in the pipeline is Nagaur. Nagaur, we have, mining lease licenses with us, and we have already started acquiring land, taking approvals, and we do have plan to set up a 3 million ton plant out there. So I think North is very much, focused in our case. And North, we are going to be a very formidable player. If you look at, North, our capacity, installed capacity in North itself is, close to 10 million ton, which is none less than even the bigger player in that market. Okay? Yeah, so I think that is going to be our focus. That will remain our focus even going forward, one. Second, I think you asked about, exploring other market. I think Northeast, we are not there. As an organization, we do kind of, have a look at our, future, canvas as to where we want to play. And we felt that, Northeast is a good market where we should be in. And that is what we are trying to be there. In East, I think I told you that our capacity utilization has reached to a level. Now we have a good plan of 4.6 million tons, right? So there we want to consolidate our presence, right? Similarly, I think wherever we feel that, any opportunity which comes on our way, or be it, brownfield or greenfield, right? We definitely evaluate and we take a very conscious and well deliberate and thoughtful decision as to how much we need to go there and to what extent we can play, right? So that exercise as an organization, I think anybody would be doing, and that is what I think JK Lakshmi Cement as an organization we are doing. Even going forward also, we'll look at, all opportunities. We have a clear-cut roadmap of 30 million ton by 2030, right? And the way I think we are moving, will definitely achieve that as well. So I think it's not that we are definitely, I think, we are through with all those, I think, utilization of capacities, and going forward we'll have that growth ambition as well.
And so what is the status of land acquisition at Nagaur plant? Because, sir, honestly, like the way the competitors like Free Cement, they came out with Nathdwara, their plant at Nawalgarh. Ultratech also came in. Then JSW, which has, like say, they are about to commission the plant in next 6 months. So the aggression or the speed which the other players have shown in adding capacity in the North market and with the focus, we are honestly missing on that particular part, at least in the North market. So on that line, so what is the status of that Nagaur plant acquisition or land acquisition?
So Nagaur, we have 2 mining lease licenses. In one, I think we are almost through with, all those approvals, right? So I think we are almost there where we wanted to be. In case of other mines, we have, some exchange of land like, Gochar land and forest land, which we are in the process of now exchanging. So that process is on. Okay. Plant land, we have already identified that the place, and part of land acquisition we have already done, right? So, we wanted to first kind of, ensure that all those prerequisite approvals for limestone mining is in place. That we have done in case of one mining, almost. Second, in case of second mining, yes, we are in the process of some of the more steps which we need to take. And land, we have already identified place, and we have started, acquiring land. So this is what the status as of now is. Hello. Hopefully we are audible.
Yes, sir. Yeah, sir. On the Saurashtra, so we have also one mine in Saurashtra as well. So any update on that land acquisition?
Saurashtra, in fact, I think we are, ahead of, Nagaur also in terms of acquisition. So public hearing is already done. Environment clearance is in process. Land acquisition, almost, I think, government land we have already obtained. Some, rehabilitation has to be done. So that there, I think we are in the process of, rehabilitating, some of the people who are there on the land, right? So, Kutch, I think, mining side of it, I think we are almost through.
Okay. Thanks a lot, sir.
Yeah. Thank you.
Thank you. Before we take the next question, a final reminder to participants that you may press star and 1 to join the question queue. Next question is from Shravan from Dolat Capital. Please go ahead.
Hi, sir. A couple of questions and clarifications. Sir, first, Durg expansion, you said clinker is there, and obviously 1.2 million ton grinding will be there at Durg. But 1.2 million ton, you said Madhubani. I think it was Prayagraj which will come first. Correct me if I'm wrong.
I think these two sites are ready almost in terms of land acquisition. So both the places, I think we have plant land is in place. In case of Madhubani, we already had this public hearing and we have applied for TOR and environment clearance we are going to take now very quickly, right? So Madhubani is ahead of Prayag as of now. So that is what we mentioned, that Madhubani may come, little earlier than Prayag. Earlier than Prayag.
Okay.
Yeah.
Okay, so Madhubani to be start by this March 26, and then the Prayagraj and Patraru both will come by March 28, or will possibility will both come by September?
So Patratu will come around 28 March, right? And along with Durg, at least Durg grinding station along with clinkerization and one grinding station by March 27.
Okay,
and somewhere around mid of March 27 and March 28 we'll have Prayag. Maybe September, October kind of thing event.
Okay, Prayagraj would be a September, October next year. Okay, got it. Second, sir, a couple of data points. First, what was the capex in the Q1 and what was the RMC revenue?
RMC capex first quarter was about 100 crores, and separately out of 144 you wanted the RMC was about 70 crores.
Okay, 70 crore. And sir, in terms of last time we said in terms of the cost reduction 120 odd rupees per ton for next 12 to 18 months. So that still remains intact?
That still remains intact, yeah.
Okay. Got it. And in terms of the despite that we have done 100 odd crore capex, we are kind of confident that this 1500 crore capex we will be able to do in 1400 odd crore in this remaining 9 odd months.
Yeah.
Okay. And sir, just two things wanted to clarity now as we restated the tax particularly and the PAT because of the UCWL merger. Is it possible to share the tax for Q2 and Q3 of FY25 or maybe a PAT number?
Tax you wanted to know. Tax we have already switched over to the new tax regime. So whatever profit we have going to have in subsequent quarters, we'll have to pay 25-odd% as per the new tax regime on that.
No, that I understood. What I'm trying to say for FY25, we have restated the Concall tax and PAT number. So Q1 and Q4 FY25 we have the number with the results, but Q2 and Q3, if possible, if you can share, would be helpful.
For the past?
Yeah, for FY25.
FY25, I can separately provide. I don't have readily for the 4 quarters as of now.
Okay. And just, no issues. And just one thing, wanted a clarification, sir. Did we organize a plant visit in this quarter for Bicep?
Yeah, Mr. Vaibhav had advertised a lot over that plant visit, invited the participants to go for the plant visit. He had organized that.
Yeah, because it was not there announced on the exchanges, so that's what just wanted to confirmation.
It was put there, I'm not sure. Mr. Vaibhav had talked to various people whom he thought he had spoken to, I think, all the institutional players. So obviously, maybe you must have missed it out. Others had been able to join.
Thank you. Next question is from Nidhi Hasija from Goldman Sachs Asset Management. Please go ahead.
Yeah. Hi, sir. Congratulations on the good set of numbers. So just one clarification. On the Durg plant, our CapEx number seems to have increased from 2,500 crores to 3,000 odd crores. Can you let us know what led to the CapEx increase in one quarter?
There were certain additional equipment we had talked of, which were not earlier, including the triplex, etc., plus some cost escalation going forward. That was about 1 year back that we had estimated it. So, normative that.
Okay, understood. Thanks.
Thank you.
Thank you. Next question is from Milind Ragnewar from BOB Capital Markets. Please go ahead.
Hello.
Yeah, Milind, please go ahead. We are able to hear you now. Earlier you were not able to put your...
I think. Thank you, sir, for this opportunity. First question is, what will be the cement revenue for the quarter and the base quarter?
We have given separately for 144 for the value-added product. So remaining is all cement, and the corresponding quarter was 132 crores.
Okay. Fair. And the second question from my side would be the freight cost on a per ton basis. That is showing some escalation. Any specific things that you want to call out on that as to why would that be on an inflationary side?
Yeah, I think that's what I mentioned in fact before, right? Yeah, so it has gone up little bit. If you look at waterfall lead was 393 km, it has gone to 399. And the reason I mentioned that we are trying and we are in fact seeding those markets where we are going to be present in the coming maybe a year or a year and a half. So we have started kind of feeding those markets and creating our brand awareness so that once we are, we have plant there, then we can quickly ramp up. So that is why it has gone up today.
Okay. That is the only specific reason. The increase in the lead is the only reason for the increase in the logistic cost. Is that what we should say?
Things I think is all intact.
Okay. Okay. And any specific reason for we seeing the other expenses, on a higher side, on a year-on-year basis?
That is basically because of the increase in the volume. It is not 100% fixed cost. With the volumetric increase, it is there.
Okay, there is nothing specific beyond volume side that we have something loaded in the June quarter in terms of the expenses.
Yeah, nothing.
Oh, fair. Thank you, sir. Thanks.
Thank you.
That is it from my side.
Thank you. Next question is from Uttam Kumar Srimal from Axis Securities. Please go ahead.
Yes, sir. Thanks for the opportunity and congratulations on a very good set of numbers. So my question pertains to your total debt profile. So what is the consolidated gross debt currently?
That is there in our presentation which we have uploaded on the website.
Sir, that is standalone you have given.
Now it is consolidated because now UCWL has merged. So there is nothing called standalone or consolidated. It is all together.
Okay. And sir, how much debt we are going to take this year to finance the expansion project?
Sorry, come again?
how much debt we are going to take this year to finance this ongoing?
We have talked of a capex of about 1,500 crores in the current year. For that, we may take 1,000 crores additional debt in this year.
Okay. And sir, with regard to pricing, how is the current pricing compared to Q1 FY26 prices?
So pricing more or less stable, but non-trade has gone down little bit in some market. Like in case of North and even in East, West, trade and non-trade, both prices have gone down little bit. So prices have gone down little bit than what we had last quarter. And if you compare this with exit, then yes, at least 2 zones I see that prices have slid a bit.
Okay. And sir, with regard to premium cement, this quarter it has come down to 23% compared to 25% last quarter. So where do you see this premium cement as going this year?
Sorry, come again?
Sale of premium cement has come down this quarter compared to last quarter as a percentage of overall trade sales. So where do you see the percentage of premium cement as a percentage of trade sales going this year?
So our target is to reach to minimum 27% plus premium cement, right? And what happens is when your volume goes up, then in that proportion, I told you that in some market where we have ventured into, we have sold a base product, and that is why premium percentage has gone down, right? But in all those markets where we are their core market, our premium proportion is intact. But newer market, I told you that UP East market and part of central market where we have gone, premium product has not done that well, right? But nevertheless, I think our plan is to take it to 27% by end of this year.
Okay, sir. That's all from my side, and wish you all the best.
Thank you so much.
Thank you. Next question is from Parth Bhavsar from Investec. Please go ahead.
Hi, sir. So I have just one question. This cost savings of 100 to 120 rupees per ton. Can you tell us from what and which initiatives, be it renewable energy or whatever? So what sort of capex are we putting in, and how would the renewable energy move in terms of capacity over what period? Or if there are any other levers as well? Yeah.
So renewable, we are there at 49% now. And we do have plan wherever we have possibility, we are enhancing that. Like in Gujarat and in Rajasthan, we are improving our renewable portfolio. And we see that our renewable portfolio will go around 52% in this year. So this is one initiative, of course, I think is going to give us some kind of saving. Second, I told you that TSR or AFR, which we are using in our integrated units. So from there also we are going to have saving. And third, on manufacturing area, we are initiating some AI-led initiatives in our manufacturing process. So we'll have some saving in power and fuel also once we deploy that. So I think this is in the manufacturing area. And on top line, I told you that further consolidating our newly rejuvenated brand, which we call Green Plus. And of course, I think just now I replied on premium products, so that is another area on top line. Improving price positioning further, so that is the third one, right? So these are the initiative on top line part of it. And of course, I think supply chain remains a constant factor whenever it comes to drive efficiency. So there also we have planned to further improve, our direct dispatches, work on different modes of transportation to reduce distribution costs, reduction of leads. So this is what the initiative which is in our side in case of supply chain. So these are the three major areas where I think where from this 100 plus saving is going to come in the next 12 to 18 to 24 months.
Okay, sir. That was my question. Thank you so much for answering.
Thank you. Next question is from Amit Murarka from Axis Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity again. So Just coming back on CapEx, so you mentioned like, I think 1,500 crores this year, 1,800 and then 1,500. So, like, could you also provide a split of it, like, between Durg and Northeast? Will that be split?
Basically, we are talking of about 3,000 crores of Durg, and balance will be Northeast. Other than some maintenance effects of about 70 to 80 crores every year.
3,000 crores over next 2 years or 3 years?
Yeah, 3 years.
Years, okay. And
so we started acquiring land both at Nagaur and Kutch. A bit will go in there also.
Sure. So why I asked is because Northeast, what I understand, is still going to take a bit of time to figure out. But therefore,
that much of time. It is almost there now. So that this capex number which we have given for the 3 years includes 3 basic things. 1, the Durg expansion, 2, the Northeast, and 3, the land acquisition at Nagaur and Kutch, and other normative maintenance capex.
Okay, sure. Also, lastly, like, I don't have the number of FY25. Like, what would have been your split for clinker and cement sales in FY25? FY25 for full year FY25. How much was the clinker sales that you had done?
For the full year, total we have done 121 lakh tons. So out of that, 7 lakh was the clinker. Balance was all cement.
7 lakhs. Okay, got it. Thank you so much.
Thank you. Next question is from Ritesh Shah from Investec. Please go ahead.
Yeah, hi sir. Couple of questions. First is for the East expansion, do we have any incentives in place?
Yeah, so East also, they have some incentives. So since we are in the initial phases of our preparedness, so we are going to approach to government. So they do have some incentive, and we'll try to obtain some customized package also if possible.
Okay. And sir, my basic question, yes.
Yeah. Go ahead.
Sorry, carry on, sir, please.
No, so specific number I think I will not be able to put now. Once we approach them and then come back as to what we are going to get.
Okay. Sir, my second question is we have optionality in Northeast. You indicated Nagaur. We have a lease in Gujarat. We also have something in Madhya Pradesh. Sir, how should we look at it? So after Durg, what is it that we are looking at? Is it Northeast, then Gujarat, then MP? What is the thought process? And if you could marry your answer with the limestone lease expiries that we have specifically in Rajasthan, I do understand that we have one leases in Nagaur, but I think the premium over there is quite steep. I think similar thing is also for probably for Central India as well. So, sir, how are you looking at incremental growth and how are you marrying it with the cost curve increase that we'll potentially see?
Broadly, you have answered your question in your question only. You are right. We are first targeting Durg expansion, followed by Northeast, then Kutch, and then Nagaur in that order.
Okay. And sir, on the lease expiry, how should one understand?
Yeah, so our Sirohi mines will go for re-auction in the year 2030, right? So this is one thing which is there, and a couple of years later, Udaipur also. But this is the phenomena for all, across India, that. So a lot of mines are going for re-auction in the year 2030, right? So one of our mines, of course, I think is part of that. So, yeah.
Okay. Sir, just a simple follow-up. So would it be possible for you to quantify how much can be the peak cement and clinker capacity first in Northeast, then in Nagaur, then in MP, and then in Gujarat? Just trying to appreciate the growth pipeline that we have, which can unfold over next, say, 5 years, 10 years.
So we are starting with the Durg, where we are going to add about 2.3 million tons of the clinker and 4.6 cement. we are in next quarter we'll be able to definitely, for sure, we'll be able to tell what will be the size to start with at the northeast. And as regards the Nagaur and Kutch, they are still far away. But around 3, you can broadly say 3 million each for Kutch and Nagaur. Now, northeast is the only thing which we need to finalize on the exact size of both the clinker as well as the grinding capacity, which hopefully we'll be able to form it up by next quarter.
Sure, sir. This is very helpful. Thank you so much.
Thank you.
Thank you. Due to time constraints, we'll be able to take one last question. We take the last question from Rajesh Ravi from HDFC Securities. Please go ahead.
Hi, sir. Just a follow-up question. You mentioned, so in the press release, there was this east expansion cost increase from 2,500 crore to 3,000 crore.
Yes.
Any specific reason? Because we don't see any increase in the capacity.
As I mentioned in response to query from earlier question, we had included was some additional equipment like triplex, etc. 2, we have also added railway siding at the 3 ending units, which was earlier not part of that. So that is why it has gone up from 2,500 to 3,000.
Okay. So that will only increase the efficiencies of these assets.
Absolutely.
Right. And when you mentioned the total project capex for next 3 years around 4,800 crore, I understand 3,000 crore is being earmarked for the eastern expansion, and maintenance, Durg expansion. And if I look at maintenance, it would be close to 300 crores. And how much you are factoring in for the 2 land acquisitions at Nagaur and Surat? And how much we have already spent for the northeast expansion so far?
Is already there, so it will around. So Nagaur and Kutch may be there, so that may be not far, very high figure. Balance would go for the northeast.
Okay, and how much we have spent for the northeast project till FY25? Not northeast, sorry, not northeast, east project.
East project for the Durg?
East. Durg, out of this 3,000 crores. I didn't get you.
70 to 80 crores only.
Only 70 to 80 crores. Okay. And northeast, whatever you have just paid to 130 odd crore is
we
all
have
that
done about 80-90 crores on land. On that we have already done.
Okay, and plus 130 crores.
Yeah.
Okay. Great, sir. That's all from my end. Thank you.
Thank you.
Thank you very much. We'll take that as the last question. I would now like to hand the conference back to Mr. Vaibhav Agarwal for closing comments.
Yeah, thank you. On behalf of Phillip Capital India Private Limited, we'd like to thank the management JK Lakshmi Cement for the call, and also many thanks to the person joining the call. Thank you very much, sir. Reo may now conclude the call. Thank you.
Thank you.
Thank you, Mr. Vaibhav. Thank you, everyone.
Thanks, everyone.
Thank you very much. With that, we conclude the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.
Thank you.